Good morning. Let's make a brief study on KMGB. Well, the company's IPO was here in late 96, and this being a very small cap, it almost had no volume until with this big jump here in late 2004. Then it started having some more volume, but still very low liquidity. The long-term trend is bullish. The stock is near a new all-time high now, and we can see that clearly here over the short-term chart. The all-time high is 14.44, and the short-term trend is ascending. As you can see, volume picked up quite nicely here, and so technically this should be a good buy. Let's check the fundamentals. As usual, we'll go directly to my valuation model, and these yellow lines are known facts, white lines are my estimates, and dark yellow lines are calculated by this Excel file. Okay, so the stock is now trading at $14.12. Let me check that again. No, $14.24 now. Almost 7,000 shares traded. And the initial share count, this is the number of shares outstanding we get from the latest 10Q, and it is 10.55 million shares. But as the dilution factor I put here 1.11, this means 11% a year increase in the share count. This is what has been happening lately, and that's not a positive development, as you can see here. Well, just a second, my computer is a bit slow today. Okay, let me see if I can put this right in the window. Yes. Okay, if we go here at this MSN money link, okay, you'll see that the share count was fairly stable. Oh god, the share count was fairly stable here until 2004, but then, well, they started printing shares. Maybe they made some acquisitions or something like that, but the fact is the share count has been rising at 11% pace, and so I've considered that will continue for the next 3 years. That's why I have this 1.11 here, and this gives me a final share count in 2009 of 14.4 million shares. Initial revenue, this is the past 4 quarters revenue. It was $77 million. I expect it to grow 20% a year going forward. It has been growing 23% a year for the past 4 years, but analysts are expecting just about 10% in 2008. So but they're always a bit pessimistic about the future, expecting less than the historical average. Let me put that here. Okay, analyst estimates. Oh, this is taking too long. Okay, you can see here they're expecting 90 million for fiscal 08 and 83 million for fiscal 07, so about 10% growth, but the historical average is higher at 23%, so I put here in my model, I put 20%, and this gives me a final revenue number for 2009 of $133 million. Initial net profit margin, this is the net profit margin the company had in 2006 without special items. It was 8.4%. I think this can expand a bit to 10% as revenue grows, and with this information I get a final net income estimate of $13.3 million, which means earnings per share of 92 cents in 2009. If we apply the industry average earnings multiple of 29.3, let me just show you that's the industry average here in competitors. Okay, you see the agricultural chemicals average P is 29.3, which seems very high for the growth the industry has been having of 4.6%. I don't know why this industry trades at such a high multiple. It is also a low margin business, so no, it doesn't attract me much. But I always put the industry average here, and this tells me the stock will be at $27 in late 2009, and that means the stock price will probably rise at a 24% average annual pace going forward. So the optimal selling price is 17.3. Since the stock is now at why 17.3? Because I look for at least 16% return. So and at this price, this share price compound annual growth rate would decline below, would start declining below 16%. So that's why this is my optimal selling price. With the stock now at let me check that again, at 14.24. Well, I don't find it all that attractive. Not bad either. I think it will rise, but I would like to get more than 40% here at this share price CAGR. But okay, on a 1 to 10 scale, I give it a 7. Thank you. Bye.